Hello, guys, and welcome to another episode of my YouTube channel. As you know, my name is Samuel Ajala, and what we try to do is bring you all things that are finance related, but without the jargon. And today we're going to be looking at a topic, which is what taxes does my limited company actually pay? And the reason why this kind of question has come up, we've been inundated with loads of questions from many of our viewers and clients about the amount of taxes they pay. You've got your corporation tax, you've got your VAT tax, you've got PAYE. So in total, just how are you paying and what are you paying? So the title for today's episode is what taxes does my limited company need to pay? And so the first thing we're going to look at today is your corporation tax. Some of us may know corporation tax, and corporation tax is billed at 25% on the profits that you've made. So it's not your turnover, but it's your total revenue minus expenses, and whatever is left is taxed at 25%. However, if you're earning less than 50,000 in profit, you may qualify for small profits rate of 19%. This is based on accounting profits, not cash in a bank. So even if you're not feeling rich, you still may owe taxes. The next one is VAT. This is one that's a lot of us are very familiar with. Even if you don't have a business, you buy a good and then it tells you so-and-so amount plus VAT. Well, if your tax or if your turnover is up to £90,000 in a 12-month rolling period, you must register for VAT, meaning that it's absolutely mandatory that you register. But here's the kicker. Some businesses register early to reclaim expenses, VAT on expenses, right? Now that this brings me on to something else, and I think it will be a whole new video for us to actually cover that. But when you register a VAT, there are different types of VAT registrations you can have, right? You've got the flat rate VAT, you've got the standard rate VAT, and you've got cash accounting, each with their pros and their cons depending on your setup. So what we're going to do in the future, we're going to do a video specifically for VAT and the kind of VATs that you can register and how it affects your business, right? Now, the next one that we have is PAYE. So your company may pay salaries. If it pays salaries or it hires employees, you'll likely need to register for PAYE with HMRC. And that simply means that you are going to pay income taxes on your salary. That's correct. You're also going to pay employee NI contribution on your salary, and you'll also pay employer's NI contribution on your salary. That's right. I did not mix that up. In other words, you would end up as a business owner, a limited company business owner, and actually paying two forms of national insurance. You'd be paying for the employees and you'd be paying on behalf of the company as well. So let's say that you are a contractor and you're trading through your own limited company. In other words, what would happen is that you're going to pay NI contributions on yourself as the employee, and then you're also going to pay on behalf of the employer. So you're basically paying two forms of national insurance as well as income taxes you'd be paying on those salaries as well. The next one is dividends, very popular. I'm sure you guys know this. But what you have with the dividends, I remember dividends comes after tax profit. So your company pays corporation tax, then you can distribute dividends to shareholders. In this case, it's probably just yourself. And so the first £1,000 of dividends is tax-free in 2025, 2026. After that, you'll pay a percentage towards that. And so the basic rate is 8%. Tax is what you pay. Then you pay 33.75 for higher rate earners, and then 39.35 in additional rates, right? So your basic rate is 8.75% on dividend income. This rate applies if your taxable income is between £71 and 50,270. So if your income is between that, your dividend payment will be at 8.75%, right? Then the higher rate would be between £50,271 to £125,140. And the percentage there is 33.75%. And then anything that is earned above £125,000 is at a rate of 39.35% on dividend income, right? So yes, it's probably considerably a lot, but these are the taxes you need to be aware of. And by being aware of it, with enough time, you know how you could be most tax efficient, how you can mitigate these taxes if you have some kind of full knowledge of what the next 12 months will look like in your operations, right? So that is dividend taxes. Then on top of that, if you have an office or retail space, you might owe business expenses, basically council taxes or commercial properties. Other things to keep an eye on as well are R&D tax credits. If you're doing some innovative work, you've also got capital gains tax as well. If you sell your company or even assets in your company, you may have to also pay capital gains tax. And also, you've got things like IR35, you're a contractor working through a limited company. And this may be the taxes that you're paying through an umbrella company. So there, guys, that's basically all of the information you need to know about the company tax you should pay. Just to give you a wrap up, we spoke about the corporation tax, we spoke about VAT, we spoke about PAYE taxes. We also spoke about business rate taxes, and we also looked at as well a few other depending on your business model. Don't stress, knowing what's due and when is half the battle. If you've got questions, drop them in the comments or DM me. I'm here to make it easier for you. And don't forget, we've got a tax planning webinar that's taking place on the 15th of April, 2025. I'll drop this information in the link, but be sure to join us and have a live Q&A where you're going to get the opportunity to ask any questions you want regarding taxes and tax planning for 2025, 2026. So look forward to seeing us in our next video, and look forward to those of you that will be joining us in our online webinar. Take care, and I'll see you in our next episode.